What's going on, guys? It's Lewis here. It is Friday night, 8:45 p.m. And instead of going out on a date, I am here in the charts because I have FOMO and I would be too anxious, to be honest. I'd have too much anxiety going out or like being with someone or doing anything else other than looking at the charts, studying, bettering my ability to be a trader and investor, and going over a few things that I want to go over in this video. So I am here. Maybe you're here too on a Friday night. Maybe you're here on a Saturday. I don't know. But we're all in this. We're all in this together right now. And so, yeah, I'm going to start this off with a couple things. The first thing that I want to start this off with is just a reiteration of the fact that I am trying to trade as much as possible right now because there's so many opportunities and the market looks super bullish. So I really want to try to take advantage, as much advantage as I can for these opportunities. And the second thing, which is juxtaposed with that, is the fact that even though I'm trading or I want to trade a lot, I also have my investment and my longer term HODL portfolio, or not HODL, but my longer term swing trading / investment portfolio. And I'm actually putting a lot of money into that and a lot of money into coins from that portfolio. And that one I don't touch as much as this. That one I don't touch as much as my trading portfolio. My trading portfolio, I try to get in and out, try to do it sort of quickly. But for my investment, my longer term trading portfolio, those are the ones, like, you do the fundamental analysis and you research some stuff and you put your money into those things. You could get 30, 40, 50x on your investment with those. With these, maybe you'll get, 20%, 30%, something like that, if you get that, right? On trades. But on your longer term investments, you could get way, way, way more. So I have a lot more money in my longer term investment account, and I just want to share that because I know this is a trading channel and I talk about trading all the time, but the people with the big money typically tend to invest more than trade. So I have that. With saying that though, getting back to trading, I do want to go over one thing or a couple things. The first is my trading cheat sheet checklist. So this is my trading cheat sheet checklist, and this is pretty much every time that I, come along with a concept or something really important that has to do with trading, I put it in here, and this is years and years and years of just knowledge that I have acquired when it comes to trading that I put into this cheat sheet, which comes obviously like when you get the course, it has this in it. So this has general principles, which is basically saying, like, in a bull market, buy early, ride the wave, and continue to look for buying opportunities, et cetera, et cetera. In bear markets, you want to try to sell everything as quick as possible and only look for shorts or just stay out of the market, all that good stuff, right? And that the strategy that you use really depends on the market and current market conditions. There's also a couple of other things like buy the rumors, sell the news, and those type of things, right? Then I have my trading blueprint, which of course starts with a top-down analysis, and I basically just go over how to trade. Like, you draw the range, you look for the market structure, you look for market structure breaks, you look for draws on liquidity, support resistance levels, and all these other things. And so yeah, I'm gonna be going through this again. I'm just gonna read it myself. I don't want to bore you with all of this, because it's sort of a lot. But yeah, I'm gonna go through this, and I'm going to apply this to the charts. So I have this, and that's number one. Number two is the trading strategies. So I'm creating this PDF to talk about rules-based trading strategies that you could just do over and over and over and over again. And so basically, you need to have rules-based strategies when you're trading. Things that take away most of the emotion in trading so that you could just follow it and it works most of the time, or it works enough times so that you're profitable. And the rules-based trading strategies are comprised of 4 different things. The conditions, which are what needs to happen in order for you to consider the trade. And this is usually the price like where the price is, like if the price is within the support or the resistance zone or at a fib level or somewhere, and what the market is doing. If the market is volatile, a lot of conditions have to be, set for you to even consider the trade. Then you have to have your entry, of course, and that's like where you're going in. So what needs to happen in order for you to go into the trade? And that's usually a candlestick pattern formation, or needs to hit a certain level, something like this. Maybe the indicators are showing bullish divergences. Who knows, right? Could be anything. That's your entry. And then, of course, there's your stop, where you're going to place your stops and where you're going to place your targets. And so I'm coming up with these strategies, or I'm writing down the different strategies that I'm going through, and creating this PDF, which is going to be, a bonus in the next whenever I update my course. So I have this like double top, double bottom, trading long strategies, bullish breaker trades, bearish breaker trades, bullish order block trades, all this stuff. And these are just like, do this, do this, do this, do this. So I'm going to read through this as well, and go through the charts and see if we could put any of these things on, or at least prepare for these different strategies. And so I'm going to do that. And now we could actually look at the charts. Oh, wait. Before we actually look at the charts, there is one more thing that I wanted to say. And that is this right here. So you know how I was talking about how I have like different accounts. I have my longer term account and I have my shorter term account. Well, in my longer term account, like my swing trading account, I'm looking for narratives. And right now, liquid staking derivatives, this is a narrative play that I think will play out for quite a long time. Personally, though, I do think that it is I don't think it's a Ponzi, but I think it's going to collapse upon itself, because pretty much what liquid staking derivatives are, they're saying like, okay, I have real gold bars, and I'll just say what it actually is. It's you have Ethereum, you have real Ethereum, you give it to someone, and that person gives you fake Ethereum, aka staked Ethereum, ST ETH. And then you could do whatever you want with STETH, and it's the same. It acts the same in the market as regular Ethereum, right? And then if you want your regular Ethereum, if you want your real Ethereum back, then you have to give the staked the STETH back to the issuer, and you could get your real Ethereum back. So think about it this way. Think about, instead of cryptocurrencies, what if you had real gold? You have real gold bars. You go to someone, you say, here's my real gold bars, and then they give you fake gold for that, right? They give you fake gold for your real gold. And that fake gold that they give you could be used in the marketplace, just like real gold. Okay, that is obviously completely idiotic. That is going to collapse. That is not sustainable. That is a bad, markets. That's just stupid. It's just a way to make money, to prop more money up, to put more money into the system that's not real. The real gold is real. The real ETH is real. Okay, the fake stuff that they give you is not. However, we're saying that all of these type of things, they go on for a long time, and people make a ton of money with it, and there's going to be millions and millions of dollars being put into this. So I do definitely have money in LDO and Rocket Pool, and I'm putting my money into these liquid staking derivatives, because I think that's going to continue to go up for quite a long time, until the thing freaking collapses. I don't know. But they're going to be most likely pretty big in this space, right? The other thing is the metaverse plays. Yes, the metaverse is still a thing. It's still going on. And I was looking into Ape recently, and Ape is actually going to have their other side demo coming out in March 2023. So I do want to get some Ape coin, because I think that that's going to be a pretty good narrative play coming up as well. I like IMX too, because not only is it with the metaverse, but it's also a ZK rollup. And speaking of ZK rollups, right here, we got Polygon, we got ZK Sync, and a couple other ones. And these are still doing pretty well. They're still on fire. So these are the coins that, I'm trying to get into, and I'm trying to trade, and both in my trading account and in my longer term investment account, because they're, they have more, when they have more things around them, people are looking at them more, they're more volatile, there's more opportunities. So with saying all that, let's look at the charts. And so here's the chart, and I'm just going to go through all of these different coins, all of these alts. I'm going to try to go through as many alts as possible with this. And like I said, I'm just going to go through all these different coins. Obviously, I'll go through Bitcoin and Ethereum and stuff like that, but I'm also going to look for these alts, and I'm going to try to just do shorter term trades. I want to do shorter term trades on my trading account, like to get in the flow, because I feel like I'm not in the flow right now. And there's so many opportunities. I want to really take advantage of that. I want to just be in and out, in and out, in and out until like big levels are hit. Because if you can make 4%, you know, some of these coins are going up 3, 4, 5% in a day. And it's like, okay, maybe it's not in my ideal buy zone, right? And once it hits my ideal buy zone, maybe it'll pop up 30% or 40%, you know, like how Phil did. And if you didn't know, I was in Phil, and Phil was one of my biggest bags in my investments account, because of just watch my last video and you'll know exactly why. I put timestamps in it as well. But yeah, I had Phil, and this went up 50%. So yeah, 60%, sorry, 60%. And I've had it since like way back here, right? So that was really good. But what about when it was like up here, right? I could have shorted this. I could have like shorted this for 5%. I could have shorted this for 5-6%. I could have put a long on here for a potential 5 to 8%. You know, there's still opportunities. Like that's a lot. You know, that's still a fair amount. So that's what I'm going to start doing. I'm going to try to do it every single day. Obviously, if they're not in the support resistance zones or by the edges of the range, then I'm not gonna like play it. But I am going to set things up. And I mean, like, I'm looking at Bitcoin right now. This thing just looks bullish. This looks so bullish. This should have been rejected from here. And if it wasn't rejected from here, it should have been rejected from here. But this is just like, I don't think that we're going to get a retest. I was expecting this to come down. Okay, cool. Market structure break right there. Market structure break. Come back up. Retest it. Shoot back down to 22, to this area, sorry, right here. To this right here. This was going to be the area where it comes down, pops back up, 61.8 in confluence with the bearish breaker. Okay, come back down and tag this before making its way back up. But it's not even doing that. It's like consolidating up here. That's bullish. Like, so now I'm leaning bullish, and this is another reason why I'm, you know, Friday night, 9:00 p.m. I'm on here. Even though people want to like go out, girls want to meet up. Like, I'm like, no, sorry, I gotta trade. I gotta learn stuff. I gotta be in the charts. Money. What do they say? Money over bees, or I know there's another saying. I don't even want to get into it. I'm too like, I want to be focused on this. So I'm going to go into this. I'm going to plot these charts out. Then I'm just going to pause it, and then I'm going to unpause it, and then go through like my thought process on all these different coins. So let's do it. Okay, so I'm going to start off on Bitcoin here. Let me adjust this real quick. There you go. Yeah, I'm going to start off on Bitcoin. So if we look at the 12-hour chart on well, first off, let's go to the weekly real quick. And just look, you could see that this was obviously the previous big swing high before the big dump, and now we're back up here, right? So if we go down to the 12-hour, you could see that it came into that zone, and then it crashed from there, like you would think, right? And it actually came up to the zone and crashed down to the just above the 78.6. So in between the 61.8 and the 78.6 for this move, this range right here, right? And then it popped up. Typically, when you see like on the weekly time frame, it popped all the way back up to the weekly resistance. It typically comes down to the 61.8, not of just like the 12-hour chart, but from the entire move up, which means that it comes from this bottom to this top, which means that it should have come down to right there, or maybe even further down. If we go down to the 12-hour chart, it should have came down to the 50%, maybe the 38.2. And I guess you could say it came just but it didn't actually hit the 38.2. It came right above it. It front ran the 38.2. And normally you don't see it front run the 38.2. Normally it tags the 38.2 and then pops up, or it hits the 50 and then pops up from there. Either way, I would have assumed it would have at least hit this right here, which was the bullish bullish order block, because this was the down move. This white candle was the down move before the up move that broke the market structure, right? So this was the bullish order block. You would think that it would have come down to there. It didn't come down to there. It didn't come down to 38.2. It front ran it. And even right here, this zone right here from this to this top, it didn't come down to the 78.6 before pumping back up. So it pumped up, right? And then what happened is it came up here, and then if we go down to the 1 hour chart, it pumped above the previous close, which was also the big weekly level, right? Pumped up above it and then fell back down below it. Oh, okay, crap, deviation. This is a swing failure pattern on the higher time frames, or a deviation on the of the range. Well, it's back above the high. It's back above the swing high now, the weekly big resistance level. And so is this going to be like some type of double top situation? Actually, no, it's not. Okay, so this is what I'm thinking. First off, it pumped all the way back up above this weekly level. Typically, if things were bearish, it would pump back up to here and then crash back down to this, weekly level. Or at the very least, on the 1 hour chart, we have this right here. Okay, so let me do this. So this right here on the 1 hour chart, this is the move down before the move up that broke the market structure, which means that this right here, when the price was right there, this was a bullish order block. When the price came down and simply slashed right through it, that bullish order block became a bearish breaker. And typically you would see the price rally back up to the low of the bearish breaker and then crash back down from there. But the price closed above the bearish breaker. That is bullish. That invalidates this bearish breaker now, which means that the price is now bullish, which means that there's a possibility. Well, there's always a possibility for anything, but it means that the probability of it consolidating, doing something like this before moving back up, has just become much higher, because it really should have not closed above this level right there. It shouldn't have closed above there. Even on let's look at the 4 hour chart, see if there's something on the 4 hour chart. Yeah, no, 4 hour chart. On the 4 hour chart, it did not close. Okay, so on the 4 hour chart, this was the breaker on the 4 hour chart. It didn't close above there, but it wicked pretty far above there. And typically, where is it? Here. Typically, it comes up to the bottom of the bearish breaker on the 4 hour chart and then, falls back down. That's what I was expecting. Didn't even do that. It's consolidating within the bearish breaker on the 4 hour chart. And this is a big doji candle, like big wicks to either side on the 4 hour. So maybe here's the bearish case. Because this is a breaker on the 4 hour, and we are still in it. We never closed above it on the 4 hour, even though we did close above it on the 1 hour. This is still technically bearish. If we get a wick, if we get a few more wicks up here, then maybe this is going to be bearish, especially if we get a big wick up and then it comes back down and this next candle turns into a shooting star. Then okay, that's worrisome. But right now I want to look for longs, not in Bitcoin though, because it's too close. It's within the bearish breaker, so you're not going to look for longs there. But maybe in these other coins, that are not tied to Bitcoin right now, like look at Link right now. Look at Link just moving up like crazy. Does this happen in bear markets? Do altcoins just shoot up while Bitcoin stagnates during bear markets? No, altcoins fall hard. But look at Bitcoin right here. Fall, and then up 4% or whatever. Link over the last 1 day, 10%. go back here. Over the last 20 hours, 5%. I don't know. Sorry. Okay, I guess they are still in conjunction with Bitcoin. See, this is why I do my analysis, because I get ahead of myself and I need to. Oh, I just missed it. I need to really, really assess. So let me look at these alts, and I'll be right back. Okay, I'm looking at Ethereum now, and this is what I see for Ethereum. I see the Ethereum. We got this first off way back here. Let me do this. We had this zone right here. This right here, this was a perfect distribution pattern right there. You know, up, higher high. Like, I know that seems like it could be a bullish pattern, but this right here is a distribution, Wyckoff distribution, right? Look at this. This is very, very similar to this. This is somewhat looks sort of like a distribution pattern. 1, 2, 3, like 1, 2, 3, right? And then these are just a little bit more drawn out. But when we had this drop, we literally had this drop like just to here. Like that's it. That's it. Is that the 38.2? Let me check. Oh, I'll actually do this and then change this to the Crypto Elite Fib. 38.2. Okay, so it just fell to a 38.2 and then jumped all the way back up, and now we're back above the highs. So if we go in here, we could see that this was the January high. This was a January high, came back up, tapped it, couldn't get above it. Textbook short right here. Okay, lots of like this one right here. This was the swing feather pattern. Entered the short right here, stop above there, target you know, could honestly target the 50, the mid range, but we didn't even get down there. So first target would be here, and then the 50 range. But we only got to 38.2 before jumping all the way back up, and now we're back above the January's high where we had all of this resistance. So when I'm looking at this, I'm saying to myself, okay, there were so many sellers here, and there were a lot more sellers right here, and there were still sellers pushing the price down, just pushing it down until finally the buyers were exhausted and the price just fell, right? It just collapsed until the buyers came back and shot it all the way back up to not just to the resistance, but above the resistance. And then the sellers just are exhausted. The seller, like, to me, this looks like seller exhaustion, and that the buyers are here to push it back up. I don't know. Maybe it's gonna roll over and, you know, fall back down. But just from what I'm seeing right now, this looks pretty bullish to me. So that's Ethereum. I mean, honestly, let's see if I go down to the 4-hour chart. What can I do? Well, you see on the 4-hour chart, it came down. It had this bearish order block. This was the move up before the move down. And then that just got totally obliterated, right? And so it should have come down to tag this right here. Didn't make it. It never made it down here. It only made it up here. And then this became the bullish order block, and it pumped all the way up here. It should have come down and tagged this. Didn't tag this. The only thing that I'm looking up right here is that this is somewhat of an imbalance, you know, fair value gap, whatever you want to call it. So maybe the price comes down here. But what I'm seeing is that the price came back up similar and did a similar thing to what happened with Bitcoin, where it pumped up, created a higher high, bullish market structure break. So this should have been a bullish order block. Price just crapped right through it. Now the price like came back up to where it should have been a bearish breaker, but the price closed above it. So that invalidates the bearish breaker now. So yeah, I mean, that's bullish to me too. And it's like, is this bullish to the point where basically it's an SR flip? Like, this is the resistance right here. Went above it. Okay, SR flip, and then it pulled back to 38.2, and now it's on its way back up. Honestly, that's a possibility. That's definitely a possibility. So what would be the move? The move now would be to get in, do something like this, and then target highs. I'd probably target, well, let's see here. If you take the fib from the bottom to the top, I'd probably target 1805 as sorry. Yeah, Same difference. 1805 as my first target, 1916 as my second target. Let me do this. Put this. I need a. Here we go. I don't know why it always gives me a heart, but I like that more. What if I just click this? Oh, I guess it doesn't matter. Okay. So yeah, these would be my targets for this trade right here. Okay, I'm moving on. I'm moving on to other coins. So I'm looking at Mana right now. Look at Mana. Look at this strategy. So this is a strategy that I have on my long, setup strategy. It's a simple bullish order block trade. So what are the conditions for the bullish order block? Well, first off, on the high time frame, the market structure needs to be bullish. So I'm looking at this, and this obviously is bullish on the higher time frame. It's a bullish market structure, right? So the price on the low time frame needs to come down near a high time frame support area. So if we look at this on the daily chart, and we see that there was this huge run up, right? There was this huge run up on Mana, and it closed right here. But right here, excuse me, let me bring this down. Right here is a big support area, right? So big support even all the way back there, right? So big support area for Mana right there, and it flew above it. So we have a higher time frame market structure must be bullish. Well, yes, this is bullish. The price on the lower time frame needs to come down near a high time frame market structure, so a support. So go to from 12-hour to a 4-hour, and you can see that the price came down to a lower time frame support. Then you go down to the 4-hour or the 1-hour time frame, and you wait for a shift in the market structure back to being bullish. So first off, without even doing that, what you could do is you could say, oh shit, this is going up, this is going up, going up. Where do I want to get in? Where's the first place that you want to get in? Well, you see this is a bullish market structure break right here through here. And you see that this is a lot of imbalance. There's a lot of fair value gap. There's basically like nothing has happened. This is a one straight line up. So it's probably going to come back down to fill some of this in. So what I would do is I would look for some type of, first off, I would look down here for, but this wouldn't get filled. But when you see this happening right here, because let's say you wanted to get in right here, but this never happened. Well, once it comes back up here, this was a bullish market structure break of this. You could look back for the bullish order block right here. So now we have a bullish order block, right, with some imbalance or whatever you want to call it within the big support area. So this is a really, really good longing opportunity. And what you would do is you would put a long on like this. You would look right here, and none of this has happened yet. But you would put a long on here, and you would put your stop under there, and you would target actually new highs. So you would target the highs right there. What I would do would be take the Fibonacci. Actually, I would take the fib from the bottom to the top, target the negative 23.6. Boom. So that would be my trade, and this would be a 26% gain trade right here with a 4.5 R. Okay, so let's see if there's something like that. Let's see if something like that happened again. All right. Well, right here we have the move up. This was a nice move up. So I could do this. This would be the area to get into the long. I would long it on the pullback. I would long it right there. The stop would go right underneath of it, right around here. And the target would be right here. Take the fib from the bottom to the top, and this would be the negative 23.6. So I would probably get out right here. I would end up getting out right here once there was a bearish market structure break to the downside on the 1 hour. So this would probably end up being around a 10% gain, which would have been a 2.5 hour. So still an excellent trade. Now let's just move on to what we're having right now. So right now, the price is in the bullish market, bullish market order. So we came up, we came down. This right here is the down move before the up move that broke this previous market structure, right? So what do you want to do? You want to get in right here because this would be a bullish order block right there. So you would put your buy right there. Stop goes right there. Target, look left. First target would be right here. This would be a 2.91R trade. Excellent. Would have hit right there, and now it's almost on its way. So obviously I'm not gonna enter it now. And the second take profit would be up here for a 15% gain of that. So right now there's not a there's not a trade set up for Mana right now because it's too close to the resistance. So what I would do is, first thing that I would do is I would take the range, take the big range, and I would say, okay, well now it's above the 50%, and it is too close. So it's in the value, it's in the premium zone. So I wouldn't want to do anything, but I guess what you could say is that if it comes down, yeah, no, this is a tough one. I would have to wait. I would have to wait for this to put a trade on for this one. Let me go to something else. But I hope you saw what I was saying before with the other trades that were available on this one. So I need to find one. I need to find a coin. This is what I need to do. I need to find a coin that has done something like this, like a run up like this. Because if I could find a coin that has done a run up like that and has not come back down to retest the bullish market, bullish order block, then that would be really good. Then I could get in on the way back down, and I could get in at a good price and shoot back up. I think Axie might be doing that. Let me check. All right, so Axie is not doing that because it's already ran back up. So let's check. This was the... Okay, so Axie never actually hit the bullish market order block. I don't know why I said market under the bullish order block. It never hit it, but this would have been the entry that you would have had. You would have had an entry right here, but it never hit it because you could see that it came up. Bullish market structure break right here. Market structure break right there. You could even draw the fib from the bottom to the top. Look for the... All right, so it hit the 61.8. That's another... You could also get in at 61.8 instead of strictly waiting for the bullish market block. But I can't really do anything right now with Axie because it's already ran up. Let me find something. There has to be a coin. There has to be something that I could do, like a coin that I could find. So let me find a coin. Ooh, Link. This looks pretty good to me. Okay, so Link. What do we have here? We have, first off, go to the 12-hour. Wow, this PA is horrible. This PA is so bad. Okay, so 12-hour, it's in the middle. So it's at the 50% between this big range, right? But if we go down, what can we see here? We could see it moved back up, broke this market structure, broke this above, closed above here, which is really good. So really, this entire zone is it, but that's pretty big. So maybe on the lower time frames, there's something better. This would be it on the lower time frames. bring it down a little bit. Maybe the 1 hour has something a little bit better. Personally, I would like this. This is what I would use for link on the lower time frames. I would do something like this. I don't know if this is the top though. That's the thing. Let's just check. Did it work? Did the same type of strategy work out prior to this? We have move up, move up. This would have been the area to look for longs. That did not happen. This one bounced off the 50. It didn't even bounce off the 50. This one just shot up. This was so freaking bullish. So many of these coins are so freaking bullish. So, yeah, you would have gone in at this. This would have been the area to look for longs for sure. And once you saw that close, that candlestick plus that close, that's a good indicator of going long. That could have been a good. That could have been a long. Anyway, this now would be what I would do for longing link. Just need to find this right here. And then I would probably, the only thing is, how's the risk reward? The risk reward is only 1.82, so it's not really the best, you know? So this would be this would be the trade for link. Only thing is that the RR is only 1.77, so I'm pretty sure you could find better R trades in other coins. So I'm going to look for other coins. I'm going to set it up, and then I will explain the process once I do that, so the video won't be so long. Okay, so I found one. And I'm probably going to look at a lot more, but I just want to make this video, I just want to get rid of this video because it's like 5 in the morning already. It's 5:11, and I should probably go to sleep soon. But yeah, I'm looking at this. So I like Algorand here because from the range low to the range high, you could see that we did drop below the 50. So this is the range, and it has not hit the 61.8% yet. So if it comes back down here, we have the 61.8. And what I really like about it right here is that you could see, obviously, this is a very big swing. This is a big swing low right here. So what happens is that I'm sure there's going to be a lot of people that are going to put their buys right here and put their sell stops, right underneath, or excuse me, their sell stops right underneath of it. So that's going to create a lot of demand, and in the form of sell stop liquidity right underneath this swing. And that happens to be at the 61.8, which also happens to be this really big key area. So I'm sure that if the price does come back down here, we will experience a bounce, and also that would give potentially room for the MACD to come back down, for the RSI to come back down, just for things to come back down before they bounce back up. So yeah, I'm going to put this trade on. This is a trade that it's only a 1-to-1 RR, and I usually do not like putting on 1-to-1 reward risk trades on, but because it's so, because it not only is at the 61.8 at the support level, it hasn't touched it yet, and the overall market is bullish, and this is in a demand zone with the sell stop liquidity right here. That is something that I really like, so I'm going to put this trade on, and hopefully I think the gains should be around $500 to $600 on this trade if it works out. So that is the one trade that I saw so far. If we go down to the 1 hour chart, bring this to the, I'll just swing this over here like this, 25, 20, yeah, something like that. Yeah, so I also like this stop because it's before the previous week's low, before underneath the 78.6. I don't think it'll get down to here, but if it does, there could also be an opportunity to compound right here, and then potentially just sell it for a small gain or just sell it, you know, at where the original buy was. But yeah, so I'm gonna put this trade on. In my next update, I'll see what it is. I'll give a little update about that. Right now, it's like at the high, like, you know, it hit the local highs right here. So there you go. And yeah, this is the place where you would want to look for shorts because it's pretty much like a double top type of deal. But I don't really want to look for shorts right now because everything, like I mentioned, like everything is like so bullish. Everything's so bullish. Like I just don't want to put on shorts. I want to look for longs. So I'll look for longs in value areas, in demand zones, in discount zones. Right. So I want to look for buys in these areas. So I like this trade a lot. One thing that I do want to say though is I looked at Aptos and oh my God, yo, if Aptos, look at the daily chart. If Aptos comes down here to the 61.8 on the daily chart, that is going to be a sick buy. Anywhere starting at $10.35 all the way down to $9.25 pretty much, like, because this is a huge demand zone. This is where it started back in October. And yeah, if it comes down here, I'm buying in very heavy to potentially make a 40% gain, 38% gain. So that will be pretty sick. If this happens, I will update everybody on how awesome I am. All right, so I'm going to end this here. Thanks again for watching, and I'll make another video soon. All right.